Hey everybody, what's going on? Welcome back to Side Hustle Enterprise. I am your favorite host, John Maz, and on today's episode of Side Hustle Enterprise, we're going to be talking about AMC and the inevitable short squeeze that so many people are talking about. Now, I've made a number of videos on AMC, on the market, on cryptocurrency, on finance in general. Now, I have to remind you guys that I'm not a financial advisor. I'm not a financial expert. I'm sharing my opinions and my thoughts with you, and I'm including you in my journey to financial freedom and financial success. Now, if you'd like to get in-depth information and talk to me one-on-one, I encourage you guys to slide on over to Discord. There is a link in the description down below to join the free Discord server. There's tons of people there, whether you're into crypto or the markets or whatever. We are there. We're here to help. We're here to talk. It's all about learning and growing together. Now, of course, if you guys like this kind of content, I encourage you guys to hit that subscribe button and hit that like button. It really, really does help so many YouTubers when you hit those buttons and you show support for the content that you like and you believe in and you enjoy watching. That being said, let's go ahead and dive into the information today. We're going to be taking a look first at Fidelity. We're going to talk really briefly about some of the regulations, and then we're going to get into some charting. I'm going to do my best to keep this video short and sweet so we can get through some major information. Let's dive right in. Okay, guys, so what you see here is orders by Fidelity customers. Now, I do believe this portion of the site or Fidelity site is available to everyone. I will do my best to link it in the description down below so you guys can take a look at it. I don't believe you have to have a Fidelity account or be a Fidelity customer. This should be available for everybody. Now, if you wanted in-depth information and more, research tools available to you through Fidelity, I encourage you guys to take a look at their brokerage sign up. I personally just created an account with them, so I'm very happy transitioning or attempting to transfer all of my positions over to Fidelity. If you've caught some of my previous videos or my live streams, you know that's been a headache for me to do, to transfer my positions from Robinhood and Webull and TD Ameritrade over to Fidelity. I am currently just waiting on my Robinhood portfolio to be transferred over. If you are in the U.S., just a quick little tidbit of information before we talk about this page here. I don't recommend you guys close your accounts if you're looking to transfer brokerages. Make sure you do a transfer. By doing that, you are avoiding having to pay capital gains tax because you're transferring from one brokerage to another. Once you sell your positions and you liquidate your account and you withdraw your money to put into a new account, you are then, looking at either gains or losses, and you're going to be responsible for those gains or losses on your taxes. So we want to avoid those for as long as possible. We possibly can. That's why we are transferring over. So that was my little spiel, little tidbit of information for you. But let's take a look at Fidelity and what we got going on. Right now, AMC is sitting pretty at number 6. We're looking at around a 6% gain for the day so far as the time of me recording this. I hope it goes up before the closing bell, of course. And we are currently sitting with 4,700 open buy orders or open position or buy orders through Fidelity for AMC. Now, this is just Fidelity customers alone. And we're talking about buy orders here, guys, not single positions of AMC shares. It's not 4,700 shares of AMC. It's 4,700 orders to purchase AMC. There is a huge difference. An order can be, one share all the way up to 100,000 shares plus. So is 4,700 orders looking to purchase. We don't know how many shares of AMC, but there are currently a lot of people, or a good amount of people trying to purchase AMC through the Fidelity brokerage, including myself. Unfortunately, as many of you guys know, based upon things that have been popping up on the news, on Reddit, on YouTube, there are very few actual shares of AMC available to be purchased or even transferred right now. I myself am having a enormous amount of trouble and struggling, trying to keep my composure and my focus for this video for you guys. But I have been trying to transfer my Robinhood account that holds the majority of my AMC shares, I've been trying to transfer this since the beginning of August, and we are now approaching the end of August, and my shares have not been transferred. The transaction has been canceled, the transfer has been canceled, and so on, yada yada yada. So I don't know if that's because there are no shares available to transfer, and all my shares on Robinhood are synthetic. I don't know. I would love to get those shares over there. And the rest of my portfolio, I have cash available in that portfolio, so I can buy additional shares of AMC on Fidelity. Now, it's been a struggle for me the past almost 3 weeks now, because if you aren't aware of it, once you start a transfer from one brokerage to another, you cannot use that brokerage that you're transferring out of. So my Robinhood account, in essence, is locked. I cannot do any physical trading on that account. I have to wait for this transfer to be completed for me to start doing my trading again. And as you guys know from following my videos, I rely on my trading in cryptocurrency for my income. So this has been a very tough 3 weeks for my family. We've had to cut back quite a bit and kind of scrape the bottom of the barrel here, close out some of my crypto positions just to pay rent and mortgage and everything, so we can push forward and hold those diamond hands for that AMC shares. Now, let's take a look at some regulations and things that have come up or have passed already in regards to the SEC, DTCC, NSCC, and so on. Now, these regulations don't just impact AMC, they impact the entirety of the market. And you'll see here a lot of them have, a lot of benefit for retail investors, in my opinion. Again, I'm going to link this in the description down below so you guys can see it as well. That way, we can talk about it together and so on. So this is the DTCC.com, legal, regulatory, or regulatory rules and filing. Now, there are quite a few here, but as we scroll down, you'll see some dates start to pop up: August 17th, July 14th, July 13th, 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 and so on. And there's just pages and pages of these. But you'll notice if we read some of these descriptions, they all start to use a very similar vocabulary and very similar terminology in regards to what is going on in the market. They are all preparing for the squeeze to happen. They're all preparing for a market crash, if you will, or preparing to or trying to avoid a market crash. They're all preparing for a cool down period. We've had Fidelity and not Fidelity. I apologize. We've had Citadel. We know that they are liquidating a large portion of their assets. They have recently reached out to Melvin Capital and asked for them to return $500 million worth of liquidity to their position. And my thoughts are they're doing this to prevent margin call on their accounts. Now, if we look at the bigger picture here and we look at shorting altogether, it's not the fact that they're shorting, it's the fact that they're using margin to short these positions, right? So from a legal standpoint, they really don't have to close their short positions if they purchase them with their own liquidity. If they purchase them with, margin or from money that they've borrowed from a bank or a brokerage, Bank of America, whoever it may be, Chase Morgan, the federal government, it's those regulatory factions that will, hey, we want our money back. You have to liquidate your position. We want our assets back. You have messed up. You have, overextended your margin. It's, too much risk for us. We're forcing you to liquidate your position. And they can do that on a moment's notice. They don't have to give, any kind of heads up. They can do that with very little notice to get those shares liquidated. And that's what we are waiting for this mother of all short squeezes, is for the margin calls to come in and for Citadel and a lot of these hedges to start covering their short positions. Now, the first hedge fund that does short or does close out some of their short positions and start to cover will be the winner in this race, in my opinion. They will get out with, the lowest amount of losses possible, and the last person to leave or close out their shorting positions are going to have the largest amount of losses. We know that Fidelity, I keep saying Fidelity, I don't know why, probably because it's an amazing brokerage, and I'm very happy to have switched. Citadel is losing money every single day, losing millions and millions, tens of millions of dollars every single day. They've lost billions of dollars up until this point. So it's only a matter of time before these regulations really push home and really take effect, and we see some action being taken against these hedge funds shorting AMC. So the short squeeze, in my opinion, could happen very, very soon. A lot of people are talking or speculating that we could see the short squeeze happening September 1st. Now, I would love to see it happen before September 1st, to be honest with you. That would allow me to kind of get my finances squared away before the end of the year, and I'd be very, very happy with that. But I don't know, and that's the big thing going around there. Nobody really knows. We can all speculate, we can all guess, but nobody really knows. So the big question for this video is it too late to get your hands on AMC shares? So let's take a look at a chart. I've drawn some warning levels for me and my position for AMC, because I do a lot of dollar cost averaging in my portfolio, and we'll go over that once we got the chart pulled up. Okay, guys, so here is the 30-minute chart for AMC, and you can see it's been done very well today so far. I'm super happy with it. I think it's, I'm done an amazing job. We're sitting pretty at 36.99. Oh, 37, there it is. We just hit 37. So we're climbing. We're doing very well. It's a nice green day today, and like I said before, if we look down towards the volume, to the bottom of volume bars, we can see that the volume isn't super high, but we're still seeing price increase. And that is an amazing bullish sign for people holding AMC. That's what we want to see. So let's take a look at the daily chart that I put together here for you guys. I know it says 60-minute, but this is actually a daily chart. And we went back to the high that we saw months ago. That was, $72, $73, and so on. And I've drawn some bands of purchasing. In my opinion, these are not resistance lines per se, but are, let's call them DCA, dollar cost averaging bands. Now we're still in the green zone. So for me personally, this is a great opportunity for me personally to buy AMC. Buying in this zone would still keep my dollar cost average low at a reasonable rate, but it's also, I believe, a safe place for anybody looking to get involved in AMC at this point. If you don't have any AMC shares, you are still in a good range. I'm saying that because if we go back and we look at the history of AMC, I'm talking some good history, like 2016, 2017, and so on, this was the price range that AMC was in during that time period. So that 35, 36, 37 price range is where AMC was at previously. So that's why I'm saying it is a strong buy position or a strong buy region for AMC and the security. Now, as we pass through 37, 38, 39, 40, we kind of get into this yellow zone here that runs from about 38 to 50. Now, still, I believe a good buying position for many, many people, especially if you had bought during the peak at 72 or above 50. This would be a good opportunity between 50 and now the current price to dollar cost average down your price. So if you purchased a position or a number of positions at this price, you would bring down your average total cost per share. If you are below it, dollar cost averaging, you are dollar cost averaging up. So if you have an average share of, say, $12 per share or $15 per share and you bought now, your average share would increase. So that's what I'm talking about when I'm talking about DCA. The next band here runs between 50 and 61, 62-ish. Now, this is where I personally would be in a beginning of the danger zone. Danger zone, I know. So, still not a don't buy area, but for me, I'd be limited on how many shares I could buy in this area. Because once I start buying in this range, my DCA, my dollar cost average, is going to start increasing dramatically. And I want to keep my DCA below, let's say, $25 per share. And then the last zone we have here, and again, these are all my opinions based upon my portfolio and my holdings, and based upon historical information that we can gather from the charts. Now we're looking at 62 to 74, 73. I'd even say 75 if you wanted to increase that just a little bit. One share. I could purchase one share at this range without completely messing, or maybe a handful of shares at this range without completely messing up my DCA if I had purchased in those other bands. It's going to be tricky. If you purchase up here, you're going to be holding the longest amount of time during the squeeze to get the most out of it, especially if you're a retail investor. You don't have the massive amounts of liquidity that so many market makers have to purchase AMC. If you have access to funds and you can purchase tens of thousands of shares at that price and the stock goes up to $100, $1,000, $5,000, $1 million per share, then you are fine. You're golden. But if you're purchasing 5 shares, 10 shares at $72, and we see $1,000, yes, you're going to see some good returns, but you're not going to see the best returns that we saw down towards the Greenlander levels. So that's where I stand. That's my risk level for purchasing AMC. Right now, I don't think it's too late. I think you are in a good position to purchase additional shares of AMC if you haven't done so already, or if you're just looking to get involved in the position. I know that a few members of the Discord server are trying to dollar cost average right now, or dollar cost average their average share price per share down because they purchased at a higher level. So purchasing now would bring down their average. I myself purchased at a lower level, so as I dollar cost into it at this price, my average share is going to come up. Now, again, guys, I'm not a financial advisor. I'm not a financial expert. This is my opinion based upon what I see moving forward for my personal portfolio. I'm just sharing it with you. Take it as you see it, make your own decisions, take your own risk, and make sure that you do your research and you feel comfortable about the positions and the trades that you are making. Now, it's going to be a historical event. Everyone's going to be hysteric. It's going to be an historical event. This mother of all short squeezes. It will probably be the last short squeeze we see for a very, very long time of this magnitude, in my opinion. So I'm in it for the long haul. I got my diamond hands. I'm looking for, $10,000 a share, $100,000 a share, $1 million a share. Those kind of the floors are set right now. A lot of people are talking about $1 million floor level, or $801,000 floor level. Sorry about that. I can't speak for them. I can only speak for myself and give you guys a little bit of insight on my trading and how I'm doing, or how I'm going to close my positions. When I see gains that are life-changing for me and my family, I will start to close my position. I will not close it all at once. I will take my time in closing it so I can collect more and more gains. I may even buy back into it if I see a good opportunity and a good dip, to be honest with you, as I'm doing now. Limit your risk. Emotion will play a huge factor in what is going on here. So keep your emotions in check, keep your risk in check, and, only invest what you are willing to lose, really. In my opinion, though, AMC is a fantastic company. They have done so much moving forward with everything that is going on, the pandemic, the short squeeze. I know I'm not supposed to say that word. Both of them, short squeeze or pandemic. But I think they're going to be around for a long, long time. I think that the valuation of the company is good where it is. So even if you bought in here and you missed the short squeeze, but you continue to hold this position for the rest of your life and hand it down to your kids, it's a good company to be involved in. It's a good security to be involved in. And I'm happy to be a shareholder. And I will continue to be a shareholder even after this short squeeze. If you have any questions about what we've gone over today, if you have your own opinions that you'd like to share with me, I encourage you guys to, hit that reminder button and come back on Wednesdays when we do that live stream. The live stream is open to everybody and anybody, whether you are on Discord and you want to chat with me live on here, or if you want to just sit in the chats and ask questions. I'm here to answer as many questions as I possibly can that I honestly feel comfortable answering. And we're just going to have an open discussion. It's every Wednesday we do the live stream. Come on by, sit, chat, talk, and let me know what your thoughts are. Are you holding AMC? Are you waiting for the short squeeze? Is this going to be a life-changing event for you? What are you going to do after the short squeeze? We'll talk about everything and anything. Again, comment down below. Hit that like button if you are holding AMC. Hit that subscribe button if you like what you hear and like what you see. And of course, guys, appreciate you, and be patient, and take your time and relax. It'll happen. It'll come. Just enjoy the show. Take it easy.